How's it going, everyone? Welcome to the sweep. Let's go ahead and get started. Appreciate you guys being here. And how's it going, everyone? Welcome to the sweep. Let's see. Let's go ahead and get started. Appreciate you guys being here.
Make sure to follow on social media. I'll leave that up here.
How's
for
it
a
going,
second.
everyone?
You
Welcome
guys
to the
can pause
sweep.
Video, whatever you'd like.
Let's go ahead and get started. Appreciate you guys being here.
Make sure to follow on social media. I'm coming through. I'll leave that up here.
How's
for
it
a
going,
second.
everyone? Welcome.
Okay.
If you guys are attending, let me know if you can see my screen and hear me talking. I want to make sure I've got this new thing going here. I want to make sure that it's working. Give me 1 second, guys.
Just double check my sound. Okay. All right, let's see. Okay, yep, it looks like it's working.
All right, awesome. All right, thanks for bearing with me there, guys. Let's go ahead and get started. So let's start with Forex news like we did before. This is not the right date. Don't worry about that. I always forget to change that. But let's go to forexfactory.com and let's look at next week's news. So Sunday, August 15th, we do have announcements on Sunday, and this starts at 5 p.m. Mountain, so that's going to be 7 p.m. Eastern. And that's for GBP, JPY, CNY, JPY. These are all yellow, right? Low impact, so not too much to be concerned about there. Some more yellow impacts right here. We have monetary policy meeting minutes for the Australian dollar, which is interesting because it's only medium impact. And that might increase as we get closer to the day, but it also may not be a big deal in Australia. So that could be why it's a medium impact right now. So that's Monday. Not much on Monday, so pretty clear skies there. Going into Tuesday, we've got a big Tuesday. We've got right here at 6:30 Mountain, 8:30 Eastern, core retail sales month end, retail sales month end, and this is for the U.S. dollar. So those are both high impact, so definitely keep an eye out for those. And then we've got Fed Chair Powell speaks. And let's see, that's USD. And so this might be a big one. Let's see what he's talking about. Online town hall event, audience questions expected. A lot of times when audience questions are expected, you're going to have a high impact because you never know what they're going to ask and how it's going to be responded, so it's not scripted. And then 8 p.m., so busy night, 8 p.m. Mountain, 10 p.m. Eastern for New Zealand dollar, right? A lot of stuff. Cash rate, monetary policy, all that stuff, so definitely keep an eye out for that if you're trading at those times on Tuesday. So Wednesday, we've got GBP starts off with at midnight or 2 a.m. Eastern with the CPI year end. And then we've got CPI monthly for the CAD at 6:30 Mountain, 8:30 Eastern. And then that brings us to the afternoon for the U.S. dollar. And this is FOMC meeting minutes. You see this one is red. Again, these are the minutes. So basically what they talked about when they decided to keep the interest rate at what it was previously set at. So they decided, okay, we're going to keep them the same, and these are the meeting minutes showing what they talked about and how it was discussed. And a lot of times traders are going to look to those things to determine where the sentiment is for the FOMC, if they're going to be increasing or decreasing interest rates in the near future. So those usually make a wave, so definitely be careful when trading the afternoon on Wednesday of this coming week. And then we've got employment changes for the Australian dollar, 7:30 p.m. Mountain or 9:30 Eastern, and then unemployment rate. And that wraps up Wednesday, takes us into Thursday. Pretty light Thursday. Philly Fed Manufacturing Index is just a medium impact, and unemployment claims is also a medium impact. So not much there. And Friday, we've got retail sales, medium impact, core retail sales, medium impact. That's for the Great Britain pound and for the CAD.
so not much there either. Nothing on Saturday, and then that's for next week, so we'll talk about that next week. All right, good. So looks like pretty clear skies leading up to Wednesday. Definitely be careful on Wednesday, especially for meeting minutes and things like that, because even leading into that announcement, a lot of times you can either see posturing where the market will posture one direction, or a lot of sideways movement that is frustrating if you're in a trade and you're maybe just a little bit down on that trade. It's kind of difficult sometimes to close those types of trades. But that would be my recommendation, if I'm being honest, is if you get to a situation where you have a trade open and afternoon is coming, even if you're just down by a few micro pips or it doesn't look like much, I would recommend just closing it, taking the hit, and not risking it, because when those things take off, they can jump beyond your stop loss sometimes and take more stop loss than you expect. So unfortunately, it doesn't usually work the same with take profit. I mean, when it does, it's not very aggressive. If it does jump your take profit and give you extra, it's not usually very significant. So the risk is greater than the reward. Again, I like coming here to CNBC, just kind of taking a look at things, the landscape of how things wrapped up this week. You can see S&P 500 grinds to another record to close out winning streak. S&P is just killing it right now, right? Let's go to oil. Oil extends losses as Delta variant slows demand recovery. So oil is down. So that's, those are some good opportunities there. Let's go to FX. And if we go to Forex, dollar dented as consumer sentiment dives, right? So we can see that the consumer sentiment today, which was prelim UOM consumer sentiment right here, it was just a medium impact, but the consumer sentiment is lower than expected, and so that had an effect in the U.S. dollar's winning streak. It's strengthening. And let's see. Let's look at crypto. No headline. So nothing big happening in crypto. A lot of people are talking big game with crypto, right? Talking about how Bitcoin is expected to hit these record highs and 100,000 and so on. But just obviously be careful with a lot of that hype, and understand that sometimes when people are saying things, it's because they have an agenda. And believe me, if they're wrong, you don't hear about it as often. You might hear about it initially, but 2 years down the line, 3 years down the line, 5, 10 years down the line, you won't hear about them being wrong about something. When they're right? Like, if you ever watched the movie The Big Short, the guy was right that one time, right? And it was a big deal. And they try to ride on those coattails for a really long time. And a lot of times people take it seriously, because it's like, well, if you did it once, you can do it again. But what we miss sometimes with some of those people is the thousands of other times that they called something and it didn't work out. So, or if you just throw your money at everything someone says and not do your own due diligence, you'll start to realize that that's a losing game, right? Because even your gains may not outweigh your losses. So, just some food for thought. Okay. Let's go ahead and move on. So I want to show you guys something, and we'll get to that in a moment. So we talked a lot about, with our mastermind group, about seven-figure day trading. And we're doing a series right now on seven-figure day trading. And essentially what it is just 4 simple steps to getting to trading, at 7 figures. And so we kind of walk through the process, but I talk a lot about, the numbers, and how those play out. So I want to show you guys an example of some back testing data and some trade trade results that were taken from this trader, taking 5 trades a day, and you can see that it's about a 75 win rate. So the win rate here is about 75% after all was said and done, and you've got a 2-to-1 risk to reward ratio. which means you've got a stop loss that's twice as large as your take profit. So that means like a 2 to 1 would be like a 10 pip stop loss and a 5 pip take profit, right? And that for some people would be like, well, how does that make any sense? How do you make any money if your losses, if your loss per trade is greater than your gain per trade? Well, it's just math, right? Because 75% of the time I'm winning 5 pips and 25% of the time I'm losing 10 pips. So that works, right? If I took, you guys seen me do this before. So if I took 10 trades, right, or let's just say 100 trades, because we're looking at big numbers today, so 100 trades, right, then 75 of them won, right, times, so equals 75 times 5 pips per trade, right, and that's 375. And then I have 25 of them, so equals 25 times 10, and that's 250, and then equals the gains minus the loss, and that's how you have your net pips, right? So I have 125 winning pips, right? And then depending on what your lot size is, that would show what that would be worth, right? And so the amount of winning pips you have it isn't relevant to the amount of money you make. What's relevant to that is the risk and your account size. So if your account size, let's say, is 2,000 and you're risking 2% per trade, then each of these pips would, or every 5 of these pips would be worth 1% of your account, because it's a 2 to 1 risk to reward ratio, right? So you can see how that would be 125% right there. So this trade setup that I just kind of pulled out of the archives and then pasted into this doc. So I had another document that had the formula already set in, so it compounds it based on the wins and losses. So this trade setup is about 5 trades a day. Sometimes it's 6, but about 5 trades per day. And so if we looked at that, then that means that in a week, that would be about 25 trades, right? So right about there. And then you can see that as the account grows, right, this first trade was 40, 40, 80, so on. And then by the time it grew to $252, the loss is $90.09, a loss there, $89 there, 88, 84, so 2 losers in a row right there, 2 losers in a row right there. And it gets pretty, I think at most we had 3 losers. Let me see. So you can see the losses get bigger, but so do the gains, right? Right here, 4 losers in a row right there, and then 2 winners and then 2 losers. That's painful, right? So it's like out of 8 trades just right here, right? 1, 2, 3, 4, 5, 6, 7, 8 trades. 6 of those were losers in that sequence right there, right? So that sucks. That's painful, but it works out, right? You keep on doing what you plan to do. Okay, so let's look at this. Because what did we say before? If you have a 70% trade and you're a 2 to 1 risk reward ratio and you're growing it by 1%, or 2% or whatever it might be. In this case, it's going to be closer to like 2.5%, 3% a day, because you're only winning 75% of them. You can double an account in like a month and a half, right? So here we have a $2,000 account. We have 5 trades a day on average. Sometimes it's 4, sometimes it's 6, but it averages out to about 5 trades a day. Okay, it's a smaller scalp trade, but this is what each of them would be worth, right? So this is representing 2% growth of the balance. And so as we move down here, so this would be like a 4% risk and 2% growth, right? So as we move down here, we got 5 trades right here, and we've increased our account by $164. So that's 1 day. So right here would be 1 week, right? That's what 1 week would look like, right there. And after 1 week, we have $235.94. Not much different than what we had after a day, right? Maybe like $75 more. Nonetheless, that's what it is, right? 1 week, your first week, and then your second week, right, which would be the 50th trade right there. Now we've got, let me, no fill. Now we've got $709 increase, right? So we're up to $709.07 profit, and that's after taking these two losers right here, by the way. And then on the 75th day, this is our 75th trade, which is going to be the third week, right here, we're up 575, right? So right here we're up 709, and right here we're up 575. That was a bad week, right? It didn't. We had you know, some streaks of losers in there, right? But overall, we're still profitable. We haven't dropped below our watermark, our capital, right, which is $2,000. So let's go to 100, and we can see that a lot of times after streaks of losers, you have nice streaks of winners. There's some losers that are sprinkled in here. You can see those. And now we're up to $936. So after that next week, we only really increased our account by you know, $400, right? Roughly 300 and some change. So you can see that, you know, you have this give and take, but again, we're only moving up into the right, right? With the exception of this week where we did kind of drop below what we were on the previous week. So that was 26 to 50 and then 51. I was trying to color code these and I messed it all up. 75 and then 76 to 100. And then we've got from 100. Now I want to just show you, and you guys can kind of look at this and see the sequence, but you can see 29, 3, 31, 31, back to 30, you know, 3,000, back to 29 right there, right? And then let's keep going. So let's get to a double up, which will be $4,000 right there. 141, the 141st trade, right? So if each month roughly has about 100 trades in it, so right here, that would be the end of the month, and then right here would be a month and a week, right? And then right here would be a month and 2 weeks, right there. So again, 1.5 months. And what happened? We doubled the account, $4,072.58 from a starting balance of $2,000, right? Give you guys some perspective. I'm just going to freeze those. It's not. Try to do it. Didn't work. Okay. So let's go and see what the next month and a half brings, right? So let's just mark off a month and a half, which would be 150, right? So if there's 25 trades in a week, then there would be 100 trades in a month and 150 trades in a month and a half. So let's go to 300. Okay, so from here to 300. Right there, 300. Okay, where did we go from? We went from 4,508, so that would be closer to like 9,000, right? And right here, the 300 day, we're at 83.97, so almost another double up right there, right? You can see we probably had a rough go there. We actually just came off of 2 back-to-back losers. Winner, loser, winner, winner, loser. So you can see right here, this sequence right here probably affected us a little bit, right? Now let's see. So this is so far, right? This would be 3 months, okay? So let's double that. Let's look at 6 months. I'm pretty sure it goes that far. Let's see. Okay, so we're at 8,300 right there. Let's go to 6 months, which would be 600. 4, 5, 6. There we go. Right there. So what do we have? 8,000, right? And if we doubled every month and a half, this is 3 months, right? So month and a half, that would be 16. Month and a half later, it'd be 32, right? So that would be 3 months, month and a half from there would be, and then another double up, that would be 3 months, right? So right here, we're at 600 trades and we're at $35,000. Okay, and then from there, let's go to a full year. So that would be 1,200 trades, right? So let's go 1,200. 10. Oh, it stops right there. Okay. So right there, and we just took a we took a $19,000 loss, an $18,000 loss, and a $17,000 loss prior to that last 1,041st trade. And what are we at? 440,644. Right? Now, if you guys want to play this in slow motion, I'll just scroll up so you guys can kind of see that that's how it played out. You can see the winners, you can see the losers. We're not making any of that up. It's just how it works out, right? And you don't let stuff like this get you down, right? Where you've got these back-to-back loser scenarios, 2 losers right there, and then a winner, right? So, I mean, if we went through, let's just go through that first. Let's look at these first colored ones right here, just the first ones that we colored. So let's say first 150 days right here, from right here, okay? And here's what we'll do. I'm just going to mark these. So this one would be a 2. So let's go up, and we're just going to take a second because I want to prove the point here. Okay, so each of these are going to be a 1. So let's see, 1, 1, 1, 1, 1, 1. That represents loser is a 2. Let's go 2, 2, 1, 1, 2, 2, 1, 1, 1, 1, 1, 2, 1, 2, 2, 2, 1, 1. And we get a lot of winners, right? Why? Because this is trading at about 75%. And you can see that what sticks out in our brain is just, indicative of how our brains work. We notice the bad more than we notice the good. So as we go through this, we notice, man, that's a lot of streaks of losers. But what we don't notice is look at these streaks of winners that we're having, right? And we don't celebrate those often enough, and they're not enough sometimes to get us out of, the doom and gloom in our brain. When we see those back-to-back losers, we have to experience them occur. We very quickly forget that we may have just come off of a series of winners, right? So like that, right? We just came off of a series of winners right here. Boom, 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 right? Right there, 9 winners in a row, okay? And then we hit 4 losers in a row. So even if we just took that, that would still be profitable. Mind you, it wouldn't be very profitable, but it would still be profitable, right? Because we have a 2-to-1 risk to reward. We have 9 winners and 4 losers. So 4 losers would be 40, and 9 winners would be 45, right? So 45 minus 40 is 5. So even though we had those losers, we'd still be profitable in that sequence. But we don't look at it that way. We look at it from here, and then we go down from there. We say, well, forget all of that. We just had these back-to-back. We start questioning our existence at this point, right? We start thinking that we got to just rethink everything we've been doing in day trading at that point, because we had these back-to-back losers, right? And it just like it's like you can't get right. It's just it just seems like you can't remember the last time you had a winner. And really, if you're taking 5 trades a day, then one of those was a winner, and then 4 of them were losers. And they were back to back, so that was a pretty crummy day for you, right? But it wasn't. It shouldn't have been a deal breaker, right? It shouldn't have been something that you say, okay, I need to rethink my whole process, or I need to change what I'm doing because it's not working anymore. And sometimes when those things happen early on in these sequences, we don't start off hot, and we don't start off with back-to-back winners, but we start off with back-to-back losers. even though we put all this time, effort, and energy into creating a trade plan and something that is scientifically and mathematically proven based on your back testing, we're quick to just dismiss it and say, you know what, this is not working for me. I'm doing something wrong. You start getting shy on pulling the trigger. Believe me, it's hard to pull the trigger when you've on that fifth trade when you just had back-to-back 4 back-to-back losers. It's hard to get the confidence in you to take that fifth trade, right? So let me show you what I mean. So I'm just gonna let me do this here. 1, 2, 3. You guys that are good at Excel are probably like, man, you're doing this the slowest way. There's such an easier way. You can do this little button thing here and there, and I don't know how to do any of that stuff. So, all right. So here's what I'm gonna do. I'm gonna make these green, just so we can see. So we have visual aid here as to how these fell out. Okay. So I'm gonna make these green. Nope. And then I'm gonna make these red. Take this now and give you some clear perspective. Copy, and then let's go here and paste. Okay, that's how they fell out, right? Red is loser, green is winner. Okay, so look, we had these streaks of winners. That's great. Hit a loser. That may not have affected us. A couple winners, loser, winner, loser, loser. That may affect you, right? That may affect your psychology, right? Because here is day 1. You had a great day 1, right? Here's day 2. You had 2 losers in day 2 out of 5. 3 winners, 2 losers, right? So you had 15 pips won and 20 pips lost, right? If that was a 10 and 5. So you had a losing day, but you're still up. And then you had a winner, right? Here's the third day, start of the third day. And then you had 2 more losers in that day. Now you're down to $70, right? You're down to $70, which is pretty close to your capital, $2,000. You're $2,070. I mean, you're doing pretty good here, right? $200 up. $250 up, and then you start to dwindle, and now you're down to only $70 up, but you're still up, right? And then you've got, now you're only up $27 there, right? And then you drop down below capital right there. Look at that. You're below capital right there on the 4th day, right? Right here. You're 1946, 1985. Believe me, you get to that point, 20 trades in, 4 days in, and you're not making any money. You start to question whether or not what you're doing actually works, right? But you got to stick to the process. You got to stick to the plan, right? By the 20th day, you're actually back to capital. You're back to $25 above capital. So you're profitable, not by much. And then going into your next 5 days, or your next 1 day, or 5 trades, you're up, right? Even after that loss, you're up. After that loss, you're here 2146.50. But you're up now, 146.50 versus just being below. And notice this is the only time right here that you went below your capital, your starting balance, right? So let's look at some of these other streaks. So right here, 26, you just took a loser, you caught a winner, great. Then 2 more losers, right? And now instead of being up 200 and some or 140 some, you're only up 58. Okay, and then here 35. Now you're back up to 272, right? And then you've got this big old streak right here. Look at this. You got some nice days in here, right there, and right there, or right there. And then on this day, you hit 2 losers. But again, we don't remember this stuff. We remember this stuff. And look, we're up even after taking that loss. Here's the total balance after the loss right there, $2,671. So let's look at that really bad day right here, right? So that's one day, but let's look at it as if it was all one day, because it was broken up between that day and that day, right? But let's look at it as if it was just one day. Let's say this was your first trade right here, and you lose. That's your second trade, and you lose. That's your third trade, and you lose. And your setup occurs right here on the fourth trade. It's hard to pull the trigger. It's hard. It was hard on the second trade and on the third trade. Now it's virtually impossible. Everything in your brain that tells you this is your setup and you have to take the trade because this is how it works out betrays you. And now it's talking you out of it. Well, it just looks like it's a losing streak kind of day. This setup is just not working today. I should not pull the trigger, even though everything about my trade plan tells me that right here is where I'm supposed to pull the trigger. I can't pull the trigger. It's difficult. And you do, and you lose, and you tell yourself, I knew it. I knew this was going to happen. I knew it just wasn't a good day for these trades. But you still have one more trade, right? And now it's the fifth trade. You don't know it's a winner. Hindsight's 20/20. All you saw was losers for the day. And now it's your fifth trade. And now it's time to pull the trigger again and potentially have another loser. This is where it gets tough. This is where your determination, this is where your dedication, this is where your why has to remind you that you need to pull that trigger, because this is not these aren't bad trades. These are good trades because you followed your trade plan. And the next one, you're going to follow your trade plan because it's a good trade and it follows your trade plan and you're going to execute. And then you win. Does it make you feel like a winner? Nope, you still feel like a loser because you lost 4 out of 5 today. And you start to think, I just tested this. This is my first trade. This is my first day, and I've taken 5 trades, and I lost 4 out of 5 of them. How is this ever going to make me profitable? You start questioning everything, right? And maybe you do survive that first day. Maybe you're doing it with a coach or somebody that's walking through the process and helping you keep your mentality in check, in order. Right? And then the next day, you got 5 trades. 1, 2, 3, 4, 5. And guess what? You got 2 out of 5 that lost. Right? So you made 15 pips, but you lost 20. So if this was your starting point, right? And you have 10 trades in here, right? You lost 6 out of 10, which means you're at 40% to this point. You're at 40%. That's what you're at if that was day 1 for you. That loser right there was day 1, and this is day 2, the end of day 2. 10 trades, and you're only at 40%. How could you possibly expect to be at 75%, which is what it backtested for, or 70%? You don't think that way at that point, even though it will work out, right? So if we look at the next, 15 days right here. Right? 15 trades. Out of 15 trades, you have 7 that lost, which now puts you closer to 55% or something, right? So you definitely have increased, but not by much, right? And so you've got, 7 losers there? And then if we go down to 20, right? You've got 9 losers out of 20. Right? So you're still pretty much in the same place that you were before. 9 losers out of 20. And then you go 25. Let's go 25. So that's 9, 10, 11 losers out of 25. Doesn't look like you're making a lot of progress, right? So there's 11 out of 25. Let's go to 30. And you've got, what is that now, 12? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 12 losers out of 30. But now you're picking it up, right? Because you had 12 losers out of 30. And so what is, if you had 30 trades and you had 12 losers, this would equal that minus that, and then equals that divided by that times 100, and you have 60%. So you went from 40% to 55 to now 60%, and now you're 30 trades into this thing, right? So let's find that. So let's go 35 trades. And all we have is winners there, right? So now we have 35 and 5 winners, 5 extra winners, right? So this becomes 35, and then this becomes 23, and now we are at 65, 66%, right? So let's keep going, because this is sometimes what it takes, right? You got to see this. So let's go to 40, right? Because it's hard to pull the trigger in some of these days. 5 more winners, no losers. So this turns into 40, and now we're at 70%. 40 stinking trades later. 40 trades. So what is that? 30, 40. That's a week and a half right there, right? Because that's 8 trade days, right? We have 5 trade days in a week, so 10 trade days in 2 weeks, and we have 8 trade days, and now we're just barely getting to the 70% range. It's difficult when you have these back-to-back losers. It sucks when you have back-to-back and then you get some respite. You get a win and then a loss, a couple wins, loss, because you're not paying attention to the fact that you caught a winner there, caught a winner there, caught a winner there. You're just thinking, man, I had 2 back-to-back losers. Okay, good, I got a winner. Oh, man, there's another loser. Okay, good, I got a winner, I got a winner. Oh, there's another loser. Why? Because you're saying, I'm risking twice as much for gains, for my growth. How is this ever going to work out? How is this ever going to even out? And now you're 2 weeks in and you're profitable, right? You're at 70%, you're profitable, but it's not by much. And then you start hitting these streaks, right? You've got loser, winner, 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 loser, loser, winner, 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 right? So this loser that's break even, because 2 winners equal 1 loser. And then winner, that's profit. Loser, that takes away your profit. Loser, that takes away your profit even further. Winner, that breaks you even, right? And then that is profit, 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 compounding profit, 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 profit. And then you've got losers, winner, loser. But at this point, look, if we go from here, 37.85, to where we ended that streak, that's 31.09. Now we're at 3,700. Then we hit a loser. Then we hit another loser, right? Then we hit a winner, 35. Think about where we started over here, 31 or 30, so 3,000. But we're at 3,500 in spite of that, right? And the next 3,600, another loser, 3,400. And then winner, winner, 35, 36, 37, 3,800, 3,900, loser, 3,700. Winner, 3,800. Loser, 3,600. We're at 600 still, right? And then what do we get? Winner, winner, right? 7, 8, 9, 4,000. 4,001. Loser, right? 4,002, and then loser, 4,067. Yes, every once in a while we're taking steps backwards, right? It looks like. Because look, we're at 3,600, 3,600, 37, 38, 39, 37. Right? So we were at 38, 39, back to 37, back to 38, back to 36, which is way up here, right? And then to 37, 38, 39. Little by little, your gains outweigh your losses. But this is the stuff that you have to be cognizant of. You have to know that these things happen. And you're not always going to start off hot with winners, back-to-back winners. That way it softens the blow of the loser. You're going to start off cold sometimes, like this, right? And you've got these as your first, 10 trades, 11 trades, where you've got 1, 2, 3, 4, 5, 6 losers out of 11 trades. That puts you to less than 50% win rate. It's like 40-something% for that. You really start to second guess as to whether or not what you're doing is working.
Okay, so you've got to stay level-headed about this. You have to realize that you've got to stay disciplined to what you're doing, because right here, even going 25 days or 25 trades in, and you're only up by $200, that really isn't painting a very clear picture to you as to how you're going to get to 7 figures, right? Okay, but let me show you something. You don't have to have 7 figures in a brokerage account to make 7 figures, right? Okay, so let's go to, right here is good. So let's say you have $250,000. You've grown your account to $250,000, right? Each trade is now worth $5,000, okay? So let's just take 2, 3, 4, 5. There's 1 day, right? And in that 1 day, you made $9,879.73. $9,879. Okay? Now, if you made, let's say it's a $252,000 account, and you're cranking out about 9,000 70% of the time, right? 75% of the time, whatever it is, and then 25% of the time you're losing 2% of whatever that account is, right? You can see that right here you can earn 7 figures. Matter of fact, you wouldn't even have to be that far, right? You could probably be just at even less than 6 figures in your account. Okay, so if we're doing 7 figures in a year, right? Let's just break this down. $1 million. There's $1 million, okay? And then we're going to divide that by 12 months, and that would be $83,000 a month, right? To get to $1 million in a year, let's call it $84,000 a month, okay? And then let's divide that by 20 trade days, right? Divided by 20, what do we need each day? $4,166 a day, okay? So let's go up to about where we're making about $925. We could even do 8,000 per trade, or 800 per trade. So let's go right. Let's see where we get a consistent. 7. Right here. If we just kept on at this pace, that's $40,000. It's not even a 6-figure trade account. That's $40,000. $40,000. You're not taking bigger trades. You're not taking more trades. You're not risking a higher percentage. The risk is relative to the size of your account, right? So you're trading a higher lot size, but you're not risking more. You're only trading a higher lot size because that's what the percentage of your account dictates. So you're not taking bigger trades. You're not taking more trades. You're not taking more risk. You're doing the same thing over and over. So that's why we say, look, learn one thing, let it get you rich, and then figure everything else out. Okay? Here you are, $40,000. $40,000, and you're making about $800 per trade. $800 per trade, and then you do 5 of those trades, right? 1, 2, 3, 4, 5, right there. And what do you make? $4,204.99. So you made $4,000, right? And what did we say? $4,166 a day equals $1 million in a year. So right here at this level, doing exactly what you've been doing ever since you had a $2,000 account, right, is the same thing you're doing right here. And in a year from that point, you are going to be a millionaire. You will have earned $1 million with $40,000 of leverage to start, and then compounded that. You will have earned $1 million. So what do you need to be $1 million, a 7-figure day trader? For this setup, for these 5 trades, for what the risk to reward is, risk percentage and win percentage, you need $40,000 in a brokerage account that you're trading that formula, right? And you can see it's not $100,000. And guess what we're doing? What do we fund you at? $50,000 to $100,000 max funding.
That's a six-figure. It's almost six-figure, 50,000, and then a six-figure at 100,000 max funded account, right? And that earns you in a year 7 figures. Let's say that you didn't do. Let's say you were only doing half this productivity. Okay, half of this. So let's say you were only taking 1 trade a day. Let's just say you were taking just 1. That's 5 times less. Okay? So let's see where we would be in 30 days. Right? 30 days, $50 up. No big deal. Right? 60 days, $700. 90 days, back to $500. Let's go 180 days. 180 days, $4,525. You've doubled your account. Right? And it took you 6 months. But now you've doubled your account. What else can you do with $2,000 besides sell drugs or buy weapons to rob a bank that you can get that kind of return? Right? Okay, so now you're at 4,000. Let's go 180, and let's go 180 more days to 360 days. So there's actually, let's go to 200 because there's about 200 trade days in a year. So 200 trade days in a year, and you're at 5,276. So you've traded for a year, and you've more than doubled your account. How's your Roth doing? How's your IRA doing? Right? What percentage, even when we have a housing market booms, are you getting that kind of increase in your investments? Right? You only started with $2,000 already in that year. You've more than doubled it. Okay? So now let's go to the second year, right? 400 trade days. 13,000 from a $2,000 account is 13,000 now. Okay? Now you have a 13,000. So watch this. This is 2 years, right? You're not retiring with $13,000. You've been grinding out at this for 2 years, and this trade setup that you take once a day made you $13,000. How long do you think it took you to take that trade setup, just that one a day? I don't know, 30 minutes or less to place the trade, set your stop loss and take profit and walk away from it? Probably more like 5 minutes. 5 minutes, 400 times, right? What is that? How long did it take to make that in hours, right? 5 minutes times 400 divided by 60, 33 hours. Anybody else get paid? And what's 33? What's 13,000 divided by 33? Anybody else make $393.93 in their spare time? Right? So you can see this is, and so what do? If you have a setup like this and you don't want to wait 2 years to get to a $13,000 account, then you backtest another setup, right? You add another one. Now you have 2 setups. Hopefully you have 2 trades a day, or it has a higher win percentage, or the like, so you can risk more on it, right? Or it has a smaller risk to reward, so you can risk more on it. Okay, so now you start to figure out, what do I need in order to get to my goal? I know I have this setup, but this setup, if I project it forward, based on the math, I'm only going to be at about $13,000 in 2 years. Well, I want to be at $100,000 by the end of this year, or within 12 months. I want to have earned a return on investment and supplement my income. That's going to be about $100,000. So how do I get that? And I'm not going to be able to get it with just this one trade setup that I'm doing 2 hours a day or 3 hours a day or whatever, right? Looking for it in those 3-hour marks, not trading it 2-3 hours straight. Okay, so if I can't get to my goal with that, then I backtest another one and another one until I get to where I need to be with all my trade setups without going beyond risking more than 5% in concurrent trades and not trading more than 2 hours a day. Right? That's how you figure that stuff out. Okay? Now, check this out. This is your 2-year mark. 13,000. So let's go another 200 trade days. That'll put us to 600. Trade number 600, or trade day number 600. Right? So let's go down to 600, which is the next year. We started that year with 13,000 this time. And now we've made $35,000. Median income in America is about 30,000. You made $35,000 that year, right? You brought your account up to $35,000 that year from $13,000, right?
So that's an increase of $23,000, right? $30,000 is the median income in America, and you made $23,000 that year just on your spare time day trading. Okay, so let's go. Now we're starting that 4th year. We're 4 years into this. We've only taken 1 trade a day. Obviously, if that's what you want to do, fine, right? I would recommend obviously maximizing the time you spend trading and get to this number a lot quicker by backtesting more setups. But let's say you're comfortable just doing this, right? We're just taking the bare bones, bare minimum, 1 trade a day, and with these parameters, right? 75% win rate, 2-to-1 risk to reward ratio, and 4%, 2%, 4% risk, 2% growth. So let's go to now 800, which would be 200 more trade days after this, right? Because each day is 1 trade. So let's go to 800. 200 trade days in a year. So let's go to 800. And where are we 4 years down the road? 91,000. Right, 91,000. Now let's go to 1,000. Let's go to that last, that 5. This is a 5-year mark, right? 5-year mark. Right there, 293,000, $294,000. Then you go into that, right? So let's say that's what our account is, $293,000. Now let's just go, a couple. I'm not sure how much further we go. I think it stops at, let's see, 20, 40, 60. That's 3 months. Let's see if we can get to 120. Nope. So 3 months is about right here, and now we're 438,000. And then and then after that another 16 trades, another 16 days. We're not much further. 444,000. So $500,000. That took a lot of time if we only took 1 trade a day, right? But we did it because we stayed determined to doing what we set out to do, right? Okay, so if that's what that garners us 1 trade a day, what if we doubled our efforts? We had 2 trades that were similar. We took 2 trades a day. Then this is what it looks like after, what, 2.5 years, right? Or 3 trades a day. And this is what it looks like after, a year and a half, right? So a year and a half, and now you have almost $500,000. And if we looked at median income, and we know that the 1%ers make about $300,000 to $400,000, $350,000 to $400,000 a year. That's it, not millionaires. If you make $350,000 or above a year, you're a 1%er. You're 1% of the Americans that make 90% of the wealth in America. Not a million, not a billion. If you thought that, you're wrong. Look it up. So when you hear somebody vilifying rich 1%ers, it's like, well, yeah, that $300,000 a year is great, right? For maybe husband, wife, 2-3 kids, but and even awesome for just a single person or a couple with no children or 1 or 2 children. But what about a husband, wife with 5, 6, or 7 kids? Those people are out there. As a matter of fact, I live in Utah. The average family size is like 7. And I'm not exaggerating. It's like 5 kids and 2 parents, right? So 7. Well, now $300,000 doesn't seem like that much money anymore, right? Especially not today where we're paying $5 a gallon in gas, right? So it's not that. It's great. You're comfortable, I'm sure, right? You're not living paycheck to paycheck, but you're definitely not rich. If you're single, you're filthy rich, right? And 300 grand, and you don't got anybody to worry about but yourself. Yeah, you are rolling in it. But here's the point: is that you've got a $400,000 account, right? Starting that year out. So if you're doubling up every 6 months, even just every 6 months, then that's $800,000 in 6 months, and that's $1.6 million by the end of that year. Now you're a 7-figure trader, right? And it took 2.5, 3.5 years. Or you add more trades and you do it in a year, or you do it in less time, right? It's all based on how much you're going to put into it, how much you're going to back test, how much are you going to figure out your craft and really nail it down and stick to it. So when you have days that kick your butt or weeks that kick your butt, you stick with it. And when the trade comes, you execute. The trade comes, you execute. Trade comes, you execute. You lost, it's okay. You execute again, you lost, it's okay. You execute again, you won, then you lost. Or like here, you executed and lost, executed and lost. You go back and say, wait, what was wrong with those trades? Oh, nothing. Okay, they were good trades, they just lost. You lost again. Wait, am I doing something wrong? Nope, I followed my trade plan. I executed the trade and it just lost. I know it's going to lose. At 70%, it could lose up to 5 times in a row. I'm only at 3, so I got 2 more losers before I start thinking that it's we're getting into uncharted territory. Oh, there's 4. Okay, I still got 1 more loser that's back to back. Otherwise, I'm expecting the winner, so I'm going to keep on pushing that button. I won. Okay, I lost. Fine. So where's my streak? There it is. 1, 2, 3, 4, 5. Winners. Loser. 1, 2, 3, 4. Winners. Loser, loser, right? You got a few other streaks here that really try your patience. And you keep on pressing through. And eventually, you're getting to a place where your account looks like you could never have imagined. And you're trading, a 5-figure account and earning 6 figures. You're trading a 5-figure account earning 7 figures. You're trading a 4-figure account and earning 6 figures. That's how it works. It compounds into those bigger numbers, right? The other killer, the other thing that can really set you back is taking out more than you should. So this is why we talk to our traders about supplementing or getting a return on investment, then working on supplementing your income, right? So that means that if you're making $50,000 a year, right, then you need make about $4,000 a month, right? So if you're going to make $4,000 a month, that's going to be divided by 20 is going to be, let's do divided by 20. So about $200 a day, right? So you need about $200 a day. So let's go down to that. Okay. So right here, nope, right here about, you need about 10 grand for this setup, right? You need about $10,000 in your account. Okay. So now you got $10,000 in your account. But here's the thing is if you did that, then at the end of that, you would have $50,000. You would withdraw that $50,000 from your brokerage account, and you would be back to $10,000, right? So let's double it, or even go to like $15,000, right? Where you're making about $300, right? And so you're getting $200 a day that you're going to cash out and you're going to spend. Right? In that year, you're going to earn $50,000 and you're leaving $100 in there. So that way, if after all said and done, you've increased your account incrementally so that at the end of that year where you've spent $50,000, you now have increased your account by $25,000. So you don't just have $15,000 in there again. Now you have $40,000 in there, right? Because you've increased it by that $25,000. So you've taken out $50,000 and you're living on $50,000, but instead of taking out $50,000 and then going back to $10,000, which is where you started when you worked your way to that $50,000 after that year, now you've got let's say a $15,000 account, and then at the end of that year, your account is increased, by like $85,000, right? So you take out your $50,000. But now you're not back to the $15,000 that you started at, right? You're back to, $35,000 or $40,000 or whatever that number is. So every year you're growing that. So you get a return on investment. Done. You supplement income at $50,000 or less or whatever that number is. Okay, great. Done. Now what? Right? The next step is replace income and then build wealth. Those are the 4 steps that we want you to be able to realize. So I challenge you, can you do that in 12 months, 12 to 18 months? Can you do it? Because everything that you need in order to do it is availed to you. It's all here. It's all here, right? Everything that you need to be successful and get to that 7-figure trading is right here. And this is how you figure it out. Take it for a test drive. If you're not on our program, test drive it. $10, and we'll donate it to charity. Walk you through the process. You decide if it's everything that we say it is. Right? Because we know it is. We have hundreds of traders doing this. It's not a matter of whether or not the system or the process works. It's a matter of whether or not it works for you. That's what I'm saying. Can you do it? Because you have all the tools, all the resources to do it. But can you do it? Just because you have everything you need in order to do something doesn't mean that you're capable of doing it. Right? You guys know me. I'm in a wheelchair. So it doesn't matter if I have the best sneakers that are designed by Nike and I've got the best, running shorts on and shirt and I've got all the protein and all the different vitamins and everything to make sure that my body is working at its peak performance. I'm not going to outrun you because I can't run. Right? It's not for me. Is this for you? Try it out. Find out. Can you do it? Are you capable of doing it? It works. It's a proven, it's a system that we know it works the way it's supposed to. It's just science and math, guys. It's just science and math. But the question you have to ask yourself is, can you do it? Can you make it work for you? No one can make you successful except you. Lead you to water, wait till your mouth is open, splash water in your mouth, hold your nose, but we can't make you drink, right? Only you can make yourself successful. So find out. Sign up. daytradesmart.com/free. Sign up today. Schedule your first one-on-one session. And show up to the appointments. And be teachable. And let us show you. Let us teach you. And then go and practice it in between sessions, in between your one-on-one coaching sessions. Open up the indicators. Place some trades. See how it works out. See if it is what we say it is. Right? And then at the end of that, within a week or two, you'll know, yeah, this is a good fit. And then we move forward. And our next programs, of course, range anywhere from $8,000 to $23,000, right? And when you realize the potential in what we're offering, and the fact that if you stick to it and you make your goal an ROI within that first 6, 9, 12 months, that it's an investment like it would be in college or starting a business. So make that investment in yourself. The only way you're going to know if you should make that investment in yourself is by trying it out first. There's a site, daytradesmart.com/free. Check it out. Sign up. It's $10. It's not going to break you. Skip your Starbucks tomorrow, right? And do something that could potentially change your financial well-being for the rest of your life and for your children's life, for their children. We're talking about generational wealth here. We're not talking about just, a nicer car. I mean, if that's your goal, cool, get one. But don't stop there. Don't stop at a nicer house, right? Build, grow, diversify. Until next week, happy trading. Look forward to working with you guys. Have a good one. Thanks.